Hi everyone, let's go through my high time frame, medium time frame and low time frame scenarios, including potential trading setups. So on the higher time frame, I'm looking for this WXY, where inside the X we were looking for an ABC expanded flat that hit the target area and also took the high of A, which is a minimum requirement. The validation of that scenario is taking the high once again in the stage that we are at the moment, because as you can see in a potential wave Y to the downside, I do have a scenario that takes the high of this wave X once more. Because a wave Y can have multiple 3-wave or corrective structures. One of them is this potentially being a 5-wave down, a 3-wave correction, and then another 5-wave down. And then we have a zigzag in wave Y. However, another potential is an expanded flat, which then is a 3-wave structure over here, which I would deem a zigzag, followed by another 3-wave structure, wave B, and then eventually going down for wave C in an impulsive move. And that scenario for me is actually more interesting. And the reason is because first of all, we have a very nice resistance area here around 30K, because it was support in the past, could turn resistance, and then we can move down. So I think testing this support resistance flip basically for the first time after, what is it, Wednesday the 8th of June, I think that would be very nice. And also many people will probably think this could become a 1, 2 and then a 3 for way more upside. So they're going to be very, very bullish when price is taking this high, while instead it can be a place where the market makers are filling their shorts for the downside. So we got to be prepared. Now the scenario, the potential trading scenario, is that we can enter inside this area of resistance with the stop loss somewhere floating above, we don't know yet, and then eventually trading it to the downside for the potential target of wave Y over here at about 10.8K, which also happens to have very nice confluence with this area over here that has never been tested since we broke out for the big bull run that we had. So this would be a very nice backtest as well, another very easy support resistance flip basically, in which potential longs can be entered, stop loss somewhere floating below, and then eventually trading it to the upside as wave Y in this scenario is then finished. On the medium time frame, I have the following scenarios where currently we're in a 1-2-1-2, and here's the green 1-2, then the green potential 3 might be in here. So we're currently might be in a green 4, which is the most likely scenario at the moment, and then we still expect a green 5 to the downside, creating this 1, 2, 3, 4, 5, and then inside wave 3 this could be a 1, 2, 3, 4, 5, where wave 1 and wave 3 are close to a similar length, as you can see here by the 1-to-1 taken from the high of 1 to the low of 1 to the high of 2. And you can see that wave 3 with a little wick is at least a little bit longer, which is a requirement. Wave 3 is not allowed to be the shortest wave between 1, 3 and 5. But then we have an extended wave 5 over here, which hit a potential target. The green fibs over here are green targets for the green count, and then we have the blue stuff over here, which is a potential target for the blue count. Now we currently bounce over here perfectly on the 3.236, which is a very valid wave 3 target, but as you can see the target box is bigger. So if we somehow come down once more, then the way we come down will decide if I can move my wave 3 to the new low that we're making, or if this is the wave 3. At the moment, as far as it looks now, seeing the structure that we have over here, it looks like we're currently working on a potential wave 4 in the green count, which can take a while. You know, it can be a more sideways correction, take a little bit longer, and what we're seeing over here can only be the first part, but more about that on the lower time frame. Now, potential trading setups over here is that, first of all, it's good to know that wave 4 tends to end in between the 0.5 and the 0.382 Fibonacci retracement taken from the high of 2 over here to the low of 3. As you can see, we have a nice target box in this area as well, which basically sits between 21.5K and 22K, with a couple of confluences that you read inside the target box over here. So this can be quite a nice area of interest in which potential shorts can be built depending on how we approach this area. And then the stop loss can float somewhere above. Now officially wave 4 is not allowed to close any bigger candles, higher time frame candles above the 0.5 fib, but at the moment I just put the stop loss above this wave 4 over here because it kind of breaks a little bit of market structure as well if we go above here once more. And then it might even be a 1 to 3 for more downside in that scenario. But then, yeah, we can trade it to the downside. However, the first potential scenario is this long over here, that if we come down once more, either for the end of wave 3 and the end of a blue wave 5 in this target box over here, which has a naked point of control, a little range over here as well, because over here there's not much structure. This is very empty. So one can think, okay, if price already went this deep inside this voice, it's very likely for price to at least come back once more and look for some support, like a little range. And we also have a target, the wave 5 target, which is the 1.618 trend-based fib extension for an extended wave 5 taken from the high of 1 to the low of 3 to the high of 4. That's how you calculate the Elliott wave target for an extended wave 5. So in this scenario, it would be quite nice to then enter potential longs in this area over here with the stop loss somewhere below, whatever price is going to do over here, and then trade it to the upside for this wave 4 target box. That would be preferred, because trading inside this area over here doesn't have high probability setups. And again, the setups I show, of course, are no financial advice, purely educational. I try to show you what you can do based on Elliott waves and how the scenarios might be better or worse. On the lower time frame, then I'm looking for this scenario, and I basically have two, as you can see, that are currently the ones that I like to keep an eye on. So first of all, we have a WXY in purple, which is a 3-3 and then another 3 type of move. The most common target area of a wave Y can be seen over here in purple, and as you can see, it actually is just below the target box. That's right there. Like, yes, we could wick in the target box and then move down, close inside this area, and then go for a move to the downside. But I don't really like this. Could be a potential short, yes, and we got to see how price is going to react when it's over here. But it's not at the moment my highest and most likely probability setup, because what I would like the most is actually for this to be some sort of an expanded flat B if we get it, because so far this structure is already pretty long. But as you can see, if we go to let's say the 30-minute, this looks to be a 3-wave structure. Then we have another 3-wave structure potentially over here. So we then have a W, maybe X is down here already, and then eventually we're working on wave Y. Or this is only W, this is still part of wave X, and then you get, or W, sorry, then this is some sort of wave X still, before then a Y to the upside, not taking the lows. That's not the case in wave X, that's very rare. And then the expanded flat idea, which actually, again, is the one I prefer for 2 reasons. First of all, you know, like with an expanded flat, many people are selling while the market makers are buying and then pushing it to the upside. But as you can see, trading wise, you also get better probabilities, because if you trade over here and you would like to trade the low of this wave X and try to do something like this, then because this is a 3-wave structure, we don't really know if price is going to come down for a wave B, or if it's gonna find support for a wave X. And like in the time frame that we're at, like if you maybe go to the 1, 3, or 5 time frame, like you can count the minimal Elliott wave structures, but those are very unreliable. So in this scenario, it's quite difficult to trade a wave X, because wave B is still a potential scenario in a 3-5 wave structure. So that's why, probability wise, wave X is not a great trade. So in the wave B, as mentioned, we're looking for a 3-3-5 wave structure. The most common target of a wave B is in between the 1.236 and the 1.38 Fibonacci, taken from the low of this wave 5 and 3 to the high of this wave A. And then we get this target area over here, which also has nice confluence with my blue target box. So potentially wicking down and then moving to the upside would actually be very nice, and could be a very interesting Elliott wave trading setup to then trade it to the target area of a wave C over here, which you can also see is a lot bigger. And this target area then for a wave C also involves the blue target box. So that's another reason why I would prefer this scenario over the purple scenario that you're seeing. A potential short setup then can be to enter the shorts somewhere over here and then stop loss above the maximum target of wave C and then trading it to the downside. So For my detailed low time frame count, check out this video, and for my 3 high time frame alternative scenarios, including my preferred scenario in a bit more detail, check out this video. Thanks for watching and subscribing, and I see you at my next video at 1 p.m. Central East European Time. Bye bye.